Hey guys, Boris Lasser from BK, great to be with you. Please note the following video is for educational purposes only. No claim is made as to the efficacy or accuracy or of any trading strategies contained in this video. And as always, do your own research. I want to start this week with the pound dollar because I think it's a perfect pair to discuss what works in flow trading, what doesn't, and where are the gray areas that I constantly sort of tiptoe around on during the week. This week I had another very good week at trading my flow strategies. Many of you who follow me on Twitter know this. But pound, which is probably one of the most difficult pairs to trade, was especially intriguing because it really confirms the two critical concepts of a successful flow trade, which is that you have to have a fundamental trigger and a confirmation of price flow in order to have really successful execution of your strategy. This is an example of pound dollar. I forget, Monday, Tuesday. Let me look at the calendar. It was PMI services was Tuesday night, right? Yeah, PMI services was Tuesday night. UK PMI services. One of the key things I want to show you here. This is the 4:30 4:30 candle. It's a 15-minute candle. One of the things you'll notice here is that I took a probative position here, wasn't working, or it doesn't even matter. I took a probative position before the event, and it didn't go my way or it didn't actualize into my trade, and I closed the position out before the trade. I actually believe I think I was actually short. I was short this thing because PMI manufacturing was weak, so I was sort of trying to scalp ahead of this thing. Doesn't matter whether I was right or wrong. The single most important thing I want to emphasize about what works in flow trading is that it is a reactive strategy. I never, ever, ever try to predict news flow because this is the result. If I was short this thing, I would have just gotten crushed. If I was long, it would have been a lucky trade. But the point being is that flow trading is all about following the news flow, not about anticipating the news flow. So I always now close out my positions, irrespective of what my bias is on a particular economic release before, because I want to actually have confirmation one way or the other of the information. Anyways, I'm bearish into this thing. It comes out, I think, blowout numbers, right? 57 against 51, just completely different from what anybody expects. And I instantaneously changed my sentiment because this kind of a powerful number obviously is very, very strong. And one of the exemptions that I make to my flow trading rule is that generally I never trade through the OOs. I use the OOs and the 50s as resistance support areas. But when you have a massive fundamental event that is so wildly surprising to the market that it has a huge amount of power behind it, I will very often trade through the OOs. In this case, I traded through the O's to the 25s. The interesting thing here is that after I get out of the trade, a couple of my followers on Twitter started needling me about the fact, hey, why aren't you taking the 25s for the run to the 50s? And, I was busy, I was cautious, I was sort of, not really paying attention. I stepped back, thought about this for a minute, and I said, you know what? They're absolutely right. In the proper flow trading strategy, the risk was positive, European data was positive, UK data was positive. It was a high probability trade that having so much momentum, they're going to run it right through the 50s. And here I took it to about 45 because I'm always taking myself out just before the OO level. But even if I didn't, even if I held on through this trade through most of the pre-North American Open, it would have actually made it all the way through 50. It's a very, very good example of just staying positive on the data, staying positive on the price flow, and obviously being profitable in the end. The reversal of this, here, by the way, it's kind of this is an interesting example. Here's just an example of what doesn't work in flow trading. And what doesn't work in flow trading is just bullshit specking for no fundamental reason. Here, I get short ahead of the 6,300 in Asia. Why? Just because it's gone far enough. How many times have we done the it's gone far enough trade? It's the OO, it should resist, blah, blah, blah. That is not a reason. That is just a pure guess because you don't have any fundamental trigger behind you. And as a matter of fact, the price action, of course, tweets around with me, takes me down about 10 points, and then, of course, shoots up, stops me out. The only thing I kind of do that's relatively correct is at this point, when I see the price action has become so strong, I listen to the market, I reverse myself, I catch a few of the pips back. But generally, it was a stupid trade, and I shouldn't have taken it in the first place. We go into the UK London Open here, and here at 63.50, I do think there is a resistance level here that's worthwhile, but I wait until the 63.50 level is actually broken to the downside. I do survive a small shakeout to the upside, but then eventually it does take me in. All of this happens, by the way, before event risk. Before event risk, this is sort of the pre-London Open pre-setup that I'm kind of fooling around with, and that's exactly what I do. Um, the thing is, again, I take myself out before the fundamental risk, even though I'm negative this risk because I know the PMI manufacturing was kind of very, very weak. The risk is very negative. IPMP comes in much weaker than expected. The thing just flushes to the downside. Here's the interesting thing that I want you to understand. I stand away, wait for the price action to take care of itself. That is, the event risk to develop, and then I use my OO levels as points of resistance. It's hard to tell on this 15-minute candle chart because everything is moving so fast, but it actually went all the way down, retraced back up to the 6,300 level. I shorted at that level, came back and covered. It did that again, went through the 63 level, and then broke all the way to the downside. Again, now this is about an hour later. I have negative news flow, 63 acting as resistance. Again, I make my money and bank it. At that point, of course, most of the news is kind of petered itself out, and it loses its value. But the pound turned out to be a very, very good pair to trade as long as I held on to my proper parameters of my strategy. Another good example that I kind of want to show you was Aussie, although here you really have to play sort of a gray area. So this is Aussie. Aussie comes out. This is employment data. It really blows through the numbers. 105, absolutely, very, very important key level. So of course, you have positive data, very strong possibility we could run to the 105. This is one of the key things that you kind of have to know about the Asian session. You have this massive adjustment in price, but very often, because Asia is sort of the lowest liquidity session in amongst the three, you very often will not get follow through. I take sort of a gander on 75, but very quickly realize that there's just not much of a follow through. Get out at 80, very lucky because the trade really kind of petered out. But here's the interesting thing. If you were trading this from a flow basis, you have positive data, you have price action come back down to the 50 support level. Because remember, now on a positive data, the 50, the 00 acts as support. On negative data, they act as resistance. You could have done a very, very good job of buying the 50s for a run to the 75s. I'm sleeping through this, so of course I miss it. But now comes Europe. Everything in Europe looks relatively hunky-dory. Risk looks pretty good. And as I come online, basically decided to get long Aussie because the data is very strong. This says that there's a strong chance now that the RBA may have to raise rates before the end of the year. That's positive Aussie. We have the 105 in sight. The bulls really have the ball in that court. There's a reasonable trade to get long. I get long, it takes a very, very long time to kind of work itself out. I'm actually right underneath the 105 because I know the 105 is going to be sticky. It takes a while. It gets very sticky over here. They finally run it yesterday. Now, here's the interesting thing that I kind of want to show you. I'm on the phone. I'm really not paying attention to what's going on. And I'm not even looking up at the CNBC and the Bloomberg screens in front of me. But I see that the Aussie drops down to the 104.50 level. And I instinctively buy the 50 support. I'm actually very late. I buy the 60 instead of the 50 and quickly pop myself out. All of this was happening while the second Japanese earthquake was going on. Now, was this a smart trade? Probably not. But I just wanted to show you just the power of the 50 and the O levels as support levels in a major uptrend or a major downtrend, and how even though I really shouldn't have been doing this, I got away with murder by basically buying at the right price. So much of flow trading is buying at the right time, buying at the right price. That's the critical thing that makes a strategy so effective. By the way, as everything kind of got worked out in Japan, a break of the 50 back up really had a massive move in Aussie, and then of course a break of 75 had a second run towards the 105s in Asia, and then even a much higher run all the way to 105.50 in Europe. All of these would have been great trades to take, which I basically missed because I was really not paying attention to the Aussie today. Bottom line is, what works in flow trading is staying on the right side of the news and staying on the right side of the price. Let the price confirm the news. Trade the levels to the OOs and use the OOs and the 50s as resistance or support within the proper structure of the trade. I'm going to finish up by just showing you a couple of my equity curves because I think you might find this interesting. So This is the trading all the way from, I'd shown this curve to you guys earlier, but I want to show this to you again because this is trading all the way from March 1 to now. And what I did is I demarcated the April 1 line because you can see this is sort of the beginning of the month. My trading, it's not glamorous. And it's, you basically see sort of a very, very quiet move up. But that's because I am trading extraordinarily small and extraordinarily tight. And I just want to show you just how tight. Let me pull up the trading. This is a zoom of my trading for this month, and you can see that I basically made about 55 basis points over the last 6 or 7 days, which I guess in the grander scheme of things in the high flying world of FX, not great. But remember, I am trading not even on 1-to-1 leverage. This was done with 1-to-5 leverage. That means I used 1/5 of my equity, just 1/5 of my equity, to achieve 50 basis points return in a week, 0.5% gains in a week on my account, on 1/5, not 5-to-1, 1-to-5. That means I was trading 20,000 for every 100,000 I had in my account. That's how low an equity I was trading. Clearly, I'm trading a little bit of low equity, and if I had, if I sort of quintuple this, my return should be better. But the question that I want to pose to you, and it's a question that I'm certainly going to be posing to myself as I go forward, is notice one thing that's been happening to my rate of return. It's been steadily climbing higher. What is the opposite that I've been doing? I've been lowering and lowering my leverage as I do this. So while the natural inclination now is to ramp it up and push it higher, maybe the more intelligent thing for me to do is to simply stay at these very low leverage levels because my returns have clearly been much better. I'll leave you with this puzzle for next week. Wishing you guys the best of luck. This is Boris Schlossberg. Next week, obviously, tons of stuff at FX Flow on Twitter and more stuff at BK. Wishing you guys best of luck and the best of trading. Talk to you then.